Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 14th of December. FOMC, locked, loaded and ready to hike. Today, the spotlight will fall on the highly anticipated FOMC policy decision. At their latest gathering, policymakers judged that the case for an increase in the Fed funds rate has continued to strengthen, which heightened speculation that they will move in December. Now, almost every market participant expects the committee to hike rates, something also evident by the Fed fund futures, which are currently pricing a 95% probability for such a move. Bearing in mind that the hike is almost fully priced in, we don't expect a major market reaction in case the Fed acts as expected. We believe that the focus will quickly turn to the updated dot plot, the new economic forecasts, and Chair Yellen's press conference after the decision. Following the US election outcome, investors have started to take seriously the promises of President-elect Trump regarding fiscal stimulus, and as such they began speculating that something like that will lead to a higher than previously anticipated inflation. This was evident by the surge in US 5-year inflation expectations and US Treasury yields, as well as stock market indices. The greenback skyrocketed as well. Accelerating inflation due to Trump's anticipated policies could cause the Fed to tighten policy faster, and that's why we believe that the dot plot will take center stage at this meeting. Even Fed Chair Yellen admitted that such a fiscal boost could have inflationary consequences, which the Fed would have to take into account when devising policy. The market is currently anticipating 1.7 interest rate increases in 2017 and another 1.8 hikes in 2018. In our view, for the dollar to rally notably from current levels, the Fed would have to deliver a much more hawkish dot plot. So if something like that happens, we believe that the euro-dollar could fall back below 106 and aim for another test near the psychological area of 105. The dollar could gain significantly against the yen as well. A move above 116 in dollar-yen could initially aim for the 116.80 level. However, we assign a low probability for the hawkish dot plot scenario, considering that the committee may be hesitant to give such forward guidance before Trump outlines the details of his policies. We believe that the FOMC may prefer to keep its projected rate path unchanged for now, especially considering that the current dot plot is more hawkish than market pricing. In such a case, we could see a relatively limited market reaction, with the risks surrounding the dollar being skewed somewhat to the downside in our view. Some investors may choose to take profit on their previous bets. Euro-dollar may aim for another test near the 106.70 or 107 zones, while dollar-yen is possible to test or even breach the support level of 114.65. As for the rest of today's events, during the European day we get the UK employment data for October. Expectations are for both the unemployment rate and the average weekly earnings rate to have held steady. The unemployment rate unexpectedly declined in September, indicating that the labour market continued to tighten even in the aftermath of the referendum. As such, we believe that unchanged rates in October could confirm that the UK jobs market remained largely unaffected by Brexit-related uncertainties, and at least thus far, and thereby bring the pound under renewed buying interest. With regards to the US indicators, we get the retail sales and industrial production for both for November. Both the headline and core retail sales are forecast to have slowed, but we see the risks surrounding the forecast has tilted to the upside. The University of Michigan and Conference Board consumer sentiment indices rose in November, supporting that retail sales may beat expectations. In case of a positive surprise, the dollar could strengthen somewhat, but the currency's forthcoming direction is likely to be determined by the FOMC's signals. Besides Fed Chair Yellen, Bank of England Governor Mark Carney speaks as well. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.